Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Political risks have moved higher overnight, but by less than you might have expected given the pressures. First, we should note that today is Martin Luther King Day in the US, celebrating a man of peace, a federal holiday, so financial markets are closed. But no one missed the irony of the day, given the US President telling the Norwegian Prime Minister he no longer feels committed to peace. The fallout has been a rise in long-term interest rates and a rise in the risk premium and a fall in the US dollar. Equities have slipped in non-US trading. In Canada, their December inflation rate rose slightly to 2.4% from 2.2% in November, with the latest month rises relatively quick. But there are base issues here with the ending of some GST relief measures. However, excluding petrol, their CPI rose 3% in December, following a 2.6% increase in November. And the Bank of Canada released two important sentiment surveys overnight. Results of the fourth quarter 2025 survey of consumers show that concerns over high prices and economic uncertainty related to the trade conflict with the US continue to have a negative impact. And after a weak year, businesses expect domestic sales growth to improve slightly. Export sales are expected to be modest. Most businesses plan to maintain or decrease current staffing levels. In Japan, they've called a snap election for February the 8th. A key issue will be GST relief, but financial markets are concerned that will make their fiscal imbalances worse. And in China, the property sector is acting like a curse on their economy. They reported that house prices fell by another 2.7% in December from a year ago. That was a 1.7% fall for new builds and a massive 7% fall for resales. The overall results are the 30th consecutive month of price decreases and their fastest pace since July. There are no capital gains in Chinese housing anywhere. And that is crimping consumer attitudes in a significant way. China's retail sales rose just 0.9% year-on-year in December, according to official data, slowing from a 1.3% increase and missing market expectations of a 1.2% gain. This is their weakest growth since December 2022. But China also said its industrial production was 5.2% higher than a year ago and rising. Coal output hit a new record high. However, China's electricity production was only 0.1% higher in December from the same month a year ago. It is hard to believe their industrial production data if this was the case. All this data then results in a fourth quarter 2025 4.5% rise in GDP, according to their official report, marginally better than the expected 4.4%. Booming exports apparently square the circle. So they are claiming a neat 5% 2025 annual growth, exactly as the party had said it would at the start of the year. Probably of more importance, China has also released updated demographic data for 2025. They said 7.9 million babies were born in the year, down from 9.5 million in 2024. The number of people who died in 2025 was 11.3 million and continued to climb. It is being widely accepted now that these trends cannot be reversed and will lead to profound population changes. In the EU, they also released CPI results for December. Their inflation was 2.3% in December, down from 2.4% in November. A year earlier, the rate was 2.7%. Germany, Italy and France had lower rates. Spain and most of Eastern Europe had higher rates, some a lot higher. Globally, the IMF raised its growth forecast to 3.3% from 3.1% this year, but warned that major risks are building. The update reflects resilient activity, strong labour markets and heavy investment in new technologies, especially AI. However, they cautioned that these same forces could become sources of instability. Rapid AI-driven investment, particularly in North America and Asia, is supporting growth in equity markets, but if productivity gains fail to materialise, it could trigger sharp market corrections and weaken household wealth. New Zealand gets no mention or coverage in this report. Australian growth, though, is forecast to be 2.1% this year and 2.2% in 2027. They noted Australia's inflation control challenge. India is the star in this report, but overall strong results are expected from Indonesia, Malaysia and the Philippines. China's 5% growth in 2025 is expected to dip to 4.5% in 2026 and 4% in 2027. Australia's monthly inflation gauge, as surveyed by the Melbourne Institute, surged 1% in December from November, the fastest pace since December 2023, and a sharp pickup from the prior 2 months. That puts it 3.5% ahead of year-ago levels. The recent surge may well get the RBA's attention. And don't forget, the RBA reviews its monetary policy 2 weeks from today on February the 3rd. Next Thursday, labour market data will be arriving, following the following Wednesday by December CPI data, both crucial decision aspects. The US Treasury 10-year yield is now just on 4.27%, up 4 basis points from this time yesterday, and its highest since September. And the price of gold will start today at $4,672 an ounce, up $76 from yesterday and a new record. Silver has pushed up to $94.50 an ounce, also a new record high. And American oil prices essentially unchanged from yesterday at just under $59.50 a barrel, while the international Brent price is still at $64 a barrel. And the Kiwi dollar is up 40 basis points from yesterday, now just over 57.9 US cents. Against the Aussie, we're up 20 basis points at 86.3 Australian cents. Against the euro, we're also up 20 basis points at 49.8 euro cents. That all means our trade-weighted index starts today at just over 62 and up 30 basis points from yesterday, and its highest so far this year. And the Bitcoin price starts today at $93,206 and down 2% from this time yesterday. Volatility of the past 24 hours has been modest though, just on plus or minus 1.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.